Understanding Canada's income tax system can be daunting for anyone, but it is especially important for students and new graduates entering the workforce. I will explain your tax obligations and provide essential information to help you navigate your taxes and maximize your deductions while staying compliant with the Canada Revenue Agency. When you earn income in Canada, whether it's from employment or business, it is subject to income tax. Even if you receive a scholarship, grant, or bursary, these can be considered taxable income. The first step in managing your taxes is determining if you need to file a tax return. If you have earned income or want to claim tax credits, it's essential to report this information to the CRA. As a student or graduate, your tax situation could change every year, so it's essential to stay informed about your filing obligations. When filing your tax return, there are various tax credits and deductions available to help lower your taxable income or reduce the amount of taxes you owe. For students and graduates, there are several tax provisions designed to help with educational expenses and transition to the workforce. You'll want to be familiar with each type of tax credit and deduction to ensure you claim everything you're entitled to. The tuition tax credit provides relief for the high costs of post-secondary education and are also known as eligible tuition fees. Eligible tuition fees are amounts that students pay to attend a post-secondary institution in Canada or, in certain cases, outside Canada. These fees are paid for courses at the undergraduate, graduate, or professional level, and can be claimed for tax credit purposes. It is important to note that not all fees associated with post-secondary education are eligible for this tax credit. Tuition fees for individual courses or a full-time or part-time program. Examination fees, if applicable. Mandatory ancillary fees, such as student service fees or athletic fees. Application fees, if the student enrolls in the institution. Costs for textbooks, course materials, or supplies. Student association fees. Accommodation, meal plans, or transportation costs. To claim the tuition tax credit, students must obtain a tax certificate called the Tuition and Enrollment Certificate, T2202 or TL11A for foreign institutions, from their educational institution. This certificate indicates the amount of eligible tuition fees paid during the tax year. Students then report the eligible fees on their income tax return using Schedule 11. The tuition tax credit is non-refundable, meaning it can only be used to reduce the tax owed to zero. However, any unused portion can be carried forward indefinitely to future years or transferred to a spouse, common law partner, or a parent or grandparent, up to a maximum of $5,000 per year. As higher education costs continue to rise, many Canadian students rely on loans to fund their post-secondary education. Fortunately, the Canadian government provides some financial relief in the form of a tax deduction for interest paid on student loans. The student loan interest deduction allows Canadian taxpayers to claim the interest paid on eligible student loans as a tax deduction. This deduction is designed to reduce the overall tax burden on recent graduates, helping them manage their debt and transition into the workforce. To qualify for the student loan interest deduction, the loan must meet the following criteria. The loan must have been received under the Canada Student Loans Act, the Canada Student Financial Assistance Act, or a similar provincial or territorial government law. The loan must have been used to fund post-secondary education at an eligible institution, such as a university, college, or technical school. The interest paid on the loan must not have been previously claimed as a tax deduction. It is essential to note that interest paid on private loans, lines of credit, or personal loans does not qualify for this deduction. To claim the student loan interest deduction, individuals must keep records of the interest paid on their eligible loans throughout the tax year. Lenders, such as the National Student Loans Service Centre, NSLSC, or provincial loan providers, will issue an annual statement indicating the amount of interest paid during the year. Taxpayers can claim the deduction by entering the total interest paid on line 31,900 of their income tax return. The student loan interest deduction is a non-refundable tax credit, meaning it can only be used to reduce tax owed to zero. However, if the full deduction cannot be utilized in the current tax year, the unused amount can be carried forward for up to 5 years. If you move to attend post-secondary education, start a new job, or run a business, you may be eligible to claim moving expenses against the employment or business income earned at your new location. Expenses can include transportation, moving and storage services, travel, and accommodations, among others. Detailed documentation of all expenses is key to making this claim effectively. As a student, if you're temporarily studying abroad, it's crucial to understand your tax residency status. Your status will determine the scope of your tax obligations in Canada. If you maintain your Canadian residency while abroad, you'll have to report your worldwide income to the CRA. However, if you are considered a non-resident, your tax obligations will be limited only to Canadian-sourced income. Speak to a tax professional if you're uncertain about your residency status. As a Canadian student or recent graduate, it is imperative to understand your tax obligations, credits, and deductions. To ensure you make the most of your tax return and stay compliant with the CRA, consult a tax professional who can guide you through your unique tax situation.